It's that time, ladies and gentlemen. Good morning. Hey. That's how you do it, right? It's a good day. It's a good day. It's hump day. Good morning, everyone. This is Financial Literacy 101. And today we're going to be talking about a couple of stocks. We're going to go over Tesla as well as Amazon, Facebook, and Apple, to name a few. If you notice, those are the FANG stocks. I did not mention Netflix. It's just not enough time to get that much information in. But nonetheless, I'm going to show you and tell you and predict how you guys will make some money. See, first and foremost, a lot of times when people start to invest, they become beginners. They have a spark, right? They call that motivation. You need motivation after you're gaining the knowledge and intelligence about how you should go about moving your money so you can make it a substantial amount of profit. Now, some people will go over the standard, historically, statistically known amount when it comes to percentage is 10%, okay? The 10%, that's what the market really does each and every year, ever since 1953 when Belgium first started the stock market on a very, very small scale. Nonetheless, I try to double that amount and try to keep my portfolio above 20%. Sometimes I'm successful, sometimes I'm not, but I try not to move things, but I need to look forward into portfolios and stocks that I know that they may have some volatility, but over the course of time that I'll make some really, really good money. So again, ladies and gentlemen, I think it's important that you understand that you have to keep it moving. You have to stay disciplined. See, a lot of times you're not always motivated, right? You get up like today, I had to go out and I worked out. I didn't feel motivated to do so, but it was the discipline of a routine, reoccurring each and every day. I'm trying to speak a message here to you guys because some of you stop your investments and you miss out on these big explosions of the amount of profit that you can make. Let me first go to my portfolio. Usually I end up last, but I just want to show you something right here. A lot of times when people looking at the portfolios, this deters them, right? If you notice, I had a large drop right here. This is all in one day, ladies and gentlemen. This is all in one day. How I had a large decline, okay, in the course of 1 week. Let me show you how much I lost. I lost in the course of 1 week, I lost about $70. But if I look at 1 month, ladies and gentlemen, I almost made $4,800 at $4,796. That's someone's entire paycheck for an entire month. That's basically off investment. That's the amount of profit that I've made by investing, $4,796. And you're telling me you can't do it. I'm showing you how to do it here. $10 a month, $5 a month, $25 a month, okay? You can start off very, very low and you can split that amount through different stocks and through different ETFs. Keep it moving. Money is a living entity that our society has given life to, because while other people are crying about being poor, other people are happy about being rich, right? Sometimes where you start is not where you end, meaning if you're starting at Popeyes, if you're starting at a secretary, if you're starting at a low-end job, that doesn't mean you have to stay there. If your bank account is on zeros, okay, no numbers in front, but a zero, that means that's where you start. That doesn't mean that's where you end. Are you listening to me? Because I want you guys to have some motivation, but at the end, I want you to have discipline. No matter what the market is doing, I need for you guys to continue to invest. With that said, let's look at Tesla. Now, Tesla, over the course, in the past day has been down to roughly $150-something, but over the course of the past year, Tesla has been up $585. Past 3 months, $292, 1 month, $200, and in the past week, it's been down $170. But let me show you my portfolio when it comes to Tesla. I've made 123%. That means for every dollar I invested, I got $1.20 back. That is absolutely phenomenal. And I've made almost $3,000 with Tesla. As we know, my portfolio has been fluctuating through the week, but that's okay. And this is 14% of my portfolio. And ladies and gentlemen, I've made $3,000 over having 5 shares. But look where I bought my shares at $449. Let's round it up to $450. This is what I'm talking about, ladies and gentlemen. Recurring investments, because I don't have all this money to go and buy $1,000 for 1 share. I don't have it. So I put my portfolio on recurring investment to the stocks that I believe through my historical data analysis of where I believe the stock is going to be a year, 2 years, 3 years from now. So look at it again. I want you to make sense of it. I bought this stock at an average cost of $450 per share. I only have 5 shares. I made $3,000, and the share is now $1,000. It's a little bit over $1,000. Okay, so I've doubled my money. That's what I should be telling you. Oh man, he doubled his money. And now I'm starting looking toward the future. Well, Elon Musk is selling a piece of his Tesla portfolio. Ladies and gentlemen, this is what they do. Anytime they feel as though that the stock is about to top off, you know how you're pulling yourself some coffee and you see that's about to go to the brim and start to overflow and then you can't put no more in there? What they do is you dump a little bit out. So he sells a little bit, make the stock go down a little bit as it's going, right? The more you have of something, the less it's worth. Let me say it again. The more you have of a thing, the less it's worth. It's kind of like during the whole start of the pandemic, toilet paper, paper napkins, paper towels, wet nap, all that. They started to run out and then they started to charge up their price. I mean, I call it price gouging, but nonetheless, okay, it's called supply and demand. So they do the same thing with stocks. When there's a high demand and there's low stocks, the stock goes up. But how can I make something worthless? I put more of a volume. I put more stocks on the market than what people are analyzing that it should be. So what occurs? The stock goes down. So already in the past week, Tesla has been down almost 15%. What is that telling other investors? Other investors are going to go in and buy up these shares. Now, there's these 3 types of investors, right? There's a lot more than 3 types of investors, right? But you have your day investors where they're offloading, they're trading thousands of shares a day, right? They're multimillionaires. I mean, you don't have to be a multimillionaire to be a day trader, but a lot of them are trading anywhere from hundreds and thousands of shares a day. They do 2 to 5 trades a day, and they already made their money for the entire month sometimes. But they continue to do it, and that's how they accumulate their money. Then you have the long-term, slow, methodical trader with less volatility like myself. I'll go and I do some volatile things, but I'm not doing too much to shake up my portfolio because I did that with Tesla and I lost 10 grand. But nonetheless, I'm just giving you the truth here. I'm just giving you the truth. It was a bad investment with an option trade. It was a very, very risky short-term option trade on a call that I shouldn't have made. But then you have swing traders. Swing traders, they look at short-term analysis of how stock is going week to week, month to month, and then they make profit off of their investment that way. That's kind of like you have your day trader, your swing trader, and then your long-term. There's a lot of other types of traders, but those kind of like the 3 main ones that people really talk about, okay? Now, with that being said, here's a prediction of Tesla in the next 12 months, okay? So currently Tesla is at $1,000, so we already passed the median, but we're looking at a high of $1,400. So ladies and gentlemen, if you get in right now, you can make a possible $400 off your investment if you invest in Tesla right now. And again, I have to beat this in your head. You do not need $1,000 to invest in Tesla. You can invest $10, $15, $30, $100. You don't need to go in and drop and buy 1 share of Tesla. Ladies and gentlemen, I only have 5 shares of Tesla. Okay, $1,000, but I've made a substantial amount of money off my very small recurring investments. Okay, dead horse. I'm done. Now, let me show you some information that a lot of you probably already knew about. These companies own large other companies like Tesla. Tesla owns a company called SolarCore, and that's how they got into the solar panel market. Okay, they acquired this company back in 2016. That's why Tesla has solar panels for roofs, and they're going to start implementing solar panels inside their vehicles. Yes. And you guys, on Friday, I'm going to do a video on Friday. Listen to this. I'm doing a video how a company called Sono Motors have already implemented solar panels into the body and design of their vehicles. And they already have 30,000 people ready to buy these sedans called Scions. Y'all heard of Scion before, right? And they made this over in Sweden, I believe, under the Saab brand, but they're not calling it Saab. They're going to stay with Sono Motors, and the name of the vehicle is called Scion. But that video is coming out on Friday, okay? This to let you know, but Tesla is, let me tell you, it's still worth a lot of money, okay? Elon Musk is the richest man in the world. Right behind him is Jeff Bezos. Okay, Elon Musk just took over Jeff Bezos. Here we have with Maxwell Technology, again, energy storage and power. Everything with Tesla is about energy storage and power, automated manufacturing, automotive manufacturing equipment. I mean, the list goes on and on. Manufacture of automated liquid dispensing and filling systems. So all of this, what are you learning here? Everything has become an automated. That means automatic. Things are being done by themselves. He acquired all these companies. So Tesla is worth so much money, and Tesla will continue to grow. See, Tesla is only at 1,000. So that brings me up to my next, Amazon. Amazon's worth $3,500 right now, ladies and gentlemen. Okay. In the past year, Amazon has risen $468 at 15%, 3 month, $218. Past month, $280. Past week, $255. And today, ladies and gentlemen, Amazon is still making bank, even through a pandemic. That's because people like Elon Musk, people like Mark Zuckerberg, and also Jeff Bezos, when the pandemic happened, guess what they did? They started to plan things out and keep it moving. They continued to conduct business over and over again, which made them the two richest men in the world. Right behind them is Mark Zuckerberg, right? Because he said, okay, Facebook is getting a bad name. We want to move into the metaverse. So now Facebook is known as the metaverse, okay? But this is important that you guys understand this information so you can get in on the investments. Now, here I am. I just started because I sold a lot of my shares of Amazon. So you see that my average cost is $3,300, and I don't even have a share yet. I'm in the triple zeros here, ladies and gentlemen, and it's only 0.07%. I like to show you these things because so you know how investments absolutely work. Now, my total return is only a measly $2, but I do have this on a what? Reoccurring buy. The next will be $25 on December 1st. I will continue to do this until these companies end, and I don't think they're ever in. Let's move along. So right now, right now, Amazon is at $3,500 per share, but I'm only investing $25 a month. So where do people think that Amazon will be in the next 12 months? Now, this is going to kill the nanny. $5,000. In the next 12 months, they're predicting that Amazon will be $5,000 at a median at $4,000. And ladies and gentlemen, even on the low end, they're still expecting Amazon to go to $3,700 per share. Can I show you something so you can compare and correlate what I'm saying? Even right now, sitting at $3,500 a share, they're still expecting Amazon to at least go up another $200. But I like to go with a median price of $4,000, ladies and gentlemen. And then the 12th will be $5,000. And this is kind of to give you some perspective. You guys are familiar with the Amazon products and brands, correct? I jumped too soon here. Give me 1 second. We already know who the CEO is. Here we go. So you know you got Amazon Prime and Fresh and Alexa, the App Store, Amazon Drive. You got the music, Fire TV. But here's some things that you guys are not familiar with. The subsidiaries of Amazon. You got Amazon Maritime, Audible.com. These are all the companies that Amazon owns. So you understand how Amazon will reach 4,000, how Amazon will reach 5,000 in the next year or two. Brilliance Audio, Create Space, Good Reads. Okay, that's another Amazon one. Health Navigator, Junglee, Lab 26, Ring. Don't forget that Amazon acquired Ring. So anytime you see Ring, think Amazon. Twitch, you know, Amazon bought Twitch. Amazon is everywhere. Whole Foods Market, they bought them. They have companies all over the world that they have acquired. This is where the money is when we're talking about Tesla, Amazon, Facebook, aka Metaverse, as well as Facebook. I have to show you these things so you understand the value, you understand the worth of why you should be investing. I don't care how much money you have left over. If you got $50 left over to blow, I want you to invest that $50, $5 here, $5 there. I don't care. I want you guys to start making some of this good money out here, okay? Now, moving right along to Facebook, also known as Meta now. Don't forget, Facebook changed its name to Meta, so don't let that alarm you. In the past year, $58 at 21%, past 3 months, It's been down past 1 month. It's been up slightly. But here's the thing about Facebook, because of all the changes that are occurring in Facebook, you also have to understand the whistleblower that came out against Facebook and other companies. You have to think long term. That's because that's what Mark Zuckerberg is doing. And people have made a lot of money off of Facebook. Let me show you something very quickly. I'm going to go here to the 5-year mark. And I want to show you, have you seen how Facebook has continually to go up the mountain? How Facebook has continually to climb? And you could have got in back here in 2017 where Facebook was $143, even when the pandemic first hit at $149. And when I take this away, because this is only like a year and a half ago that you guys could have went in and bought this stock. Now this stock is worth $331. So when I go over to tip ranks to see the prediction model, they have Facebook, aka Metaverse, going to $466 per share. Right now is at $331 per share. Okay, right now is at $331 per share, ladies and gentlemen. But they're expecting to go another $160, and they saying on the average $405. This is the average price you see, not the current price. And then on a high, we're talking about $466. Now, the top 5 companies that Facebook or aka Meta owns, right? Let's get into it. First one on the list is Instagram. Yes, anybody who didn't know this by now, you've definitely been sleeping under your car in a cave. I don't know where you've been. You've been in space, or maybe you've been in the metaverse. I don't know. But yes, Facebook owns Instagram. Let's move right along. WhatsApp. I know you guys. So when Facebook went down, remember when Facebook went down? Was it like 2 weeks ago, 3 weeks ago or so? Remember, Facebook went down, Instagram went down, and so did WhatsApp go down. They all went down at the same time. All right. And here's some other companies that you may or might not know that Facebook own. Oculus, they've been really marketing and advertising this particular thing, because this is how you're going to introduce yourself into the metaverse with the virtual reality technology. They acquired this company back in 2014. I'm showing you the value of these companies, okay? Mobile web analytics, this is how they predict certain things. And this acquisition, they said roughly 100 to 200 million back in 2013. And then they have this one right here, which is a messaging service that is kind of in support of WhatsApp. Now, the reason why I'm showing you these companies, because a lot of times you just think that you are investing in Metaverse or Facebook or Amazon or Tesla. No, you're also investing in small fractions in the companies that they have acquired, that the companies that merge with them. Okay, you're taking some of that market share and that market price into the volatility, which decreases it slight a bit in order for you to make profit. What am I talking about? Anytime you invest in one stock, that has more volatility than if you were to invest in an index or index fund, which is a basket of stocks. So when I look at conglomerates, right, companies that go out and acquisition and merge other companies with them, it's almost like you're investing in an ETF, but not quite. It has somewhat of the indicators and elements and some characteristics of an ETF, but it doesn't operate like an ETF because it's still more volatility, but it's less volatility than a company they haven't acquired or merged with anyone. Okay, just trying to give you some information here. Okay, next on the list, Apple. Now, a lot of you got Apple Watches and Apple Earbooks and Apple Wallets and Apple phones. You got everything that's Apple, right? So in the past year, Apple has been up at 30%. The past 3 months has been up around 2.5%. The past month, 4% the past week, down 0.01%, and then days been down. This is when you buy Apple, ladies and gentlemen. Here's my position. I have 11.4 shares of Apple, which is 4.51%. Now, here's where the money is. My average cost of Apple was $130. Apple is currently at $150, so you know I already made some good money. So my total return is $234 at 15%. Now it's slightly below where I wanted to be at 20%, but nonetheless, that's where I'm at. Apple, they're predicting in the next 12 months, Apple can reach $200 per share. So right now at 150, that's a $50 profit that you guys could be making if you start to invest in Apple today. Here are some companies that you may not be aware of that Apple owns, like C3 Technology and Quadro Wireless. Let me see what else. Shazam, Apple owns that as well. And then, of course, their last acquisition from Dr. Dre is Beats. Okay, they don't call them Dr. Dre Beats anymore. They just call them Beats because they're making their earplugs and earbuds and all of that stuff sound a lot better with the technology coming over from the Beats platform. Okay, so as I'm looking at this, I'm saying, okay, we understand that a lot of these stocks cost thousands and hundreds of dollars, and a lot of you are like, I want shares, and so I always give you option B. Option B is investing your money inside an ETF. And I searched and looked at the FANG ETF, which encompasses Facebook, Apple, Amazon, Netflix, and Google. Okay. I didn't really go over Google because I cover Google a lot. And just for you guys who are not familiar, anytime you see Alphabet Class A and Alphabet Class C, you're still talking about Google. That's the parent company of Google. Okay. They changed it. And the tickers for those are GOOG and GOOGL if you want to look those up for yourself when it comes to Alphabet, aka Google. Now, here are some of the ETF, those exchange traded funds that hold the very stocks that we went over here today. Now, this is the one that I currently have in my portfolio because if for you guys who are not familiar with my portfolio, I like to show every now and again so you can see the assets and the positions that I hold. So let me go down to triple Q on my portfolio here. Okay, so you guys know what's in my portfolio. Let's see here. Give me 1 second. I think I passed it. Where is it at? Where is it at? It's coming up here any second now. Okay, there we go. Right here. I only have one share. Well, I have 1.3 shares of Power Shares Triple Q, but this one particular ETF holds Facebook and Apple and Amazon and Google and Netflix. It holds all of those tech stocks within it, also known as FANG stocks. Okay, let me show you. So far, I'm doing decent. I'm not doing great. I'm just doing decent. Okay, I've only made $53 off my investment. My average cost of my stock was $353. I have 1.3 shares, which is only 1.4% of my entire portfolio. But ladies and gentlemen, I have this on what? A recurring investment for $25. Can I beat you up the head anymore about the recurring investments? It's kind of like anything else, right? You guys have your Netflix on a subscription. You have your Hulu on a subscription. You have whatever little trinkets and accounts, and you're buying makeup and you're buying this and clothes, and you have it on subscription services. And they come out your paycheck, they come out your bank account each and every month. That is what you should be doing with your investments. You set it and you forget it. It's just like an allotment. You pay your car note, you pay your mortgage, you pay your electric. We do those things on allotments, most of us, right? We want to set it and forget it. That's how you should be doing your investments. Let me move on. So I'm just going to go through these very, very quickly. These are some of the ETFs that you guys can go in and absolutely buy for yourself. Okay. So you have the Triple Q. You have the Vanguard Growth ETF. You have the iShares Russell 1000, the iShares S&P 500 Growth ETF, PowerShares Ultra Pro, the Charles Schwab US Large Cap Growth ETF. And to the left here, ladies and gentlemen, these are the tickers. This is where you go to your investment platform and you'll look up these particular symbols and tickers here. Okay, we have the Spider Portfolio S&P 500. We have MGK, and this is not to be confused with the group or Machine Gun Kelly. Okay, a Vanguard Mega Cap Growth ETF. And we also have Vanguard Russell 1000 Growth ETF. I mean, ladies and gentlemen, I can go on and on and on. What I'm going to do here, just for you guys, I'm going to put this in the chat room. I'm going to put this in the chat. So you guys have no excuse where to go and buy your ETF so you guys can make some money here. All right, I want to say good morning out here to Alaska Skies, Brent C, Prime X, G, and Maddox. Thank you all for joining me this morning. We're talking about stocks this morning. We're talking about some very pricey stocks that you guys can still get in and make some really, really good money. Last but not least, when it comes to these ETFs, let me show you how much they cost so you can start acquiring these. And you can go to your Robinhood, your Stash, your M1 Finance, and also your WeBull, those robo-investor platforms that you guys can go. And of course, recurring investments. I'm going to keep saying it, recurring investments. Now, with that being said, here are the prices of these particular ETFs with these particular funds. So from left to right, Triple Q is $400 per share per fund. IVW is $82 per fund. SPYG is $71 per fund. Let's look at it. Let's see. Let's find a low one. Here we go. QYLD, which is the Global X NASDAQ 100 covered call ETF, only $22.90 at an expense ratio of 0.09%. So anytime you're looking at an ETF, you want to make sure that the expense ratio is less than 1%. Anything over 1% when it comes to ETF and index funds is astronomically high. That's what they call operating costs. That's what they call the amount of money you're going to essentially pay for them to operate this fund for you, because it's just not one stock. It's an accumulation. There's different types of stocks within that one fund. And for these particular ones, we're talking about the FANG stocks. We're talking about Facebook, aka Metaverse. And also when you investing in Facebook, you're investing in Instagram and all these other companies, right? It also have Amazon and Netflix and Google and yada, yada, yada. You get what I'm saying? So we got that one at $22. Let's see what else do we have here. We have this one, SQQQ Pro Shares Ultra Pro at $6.19. Okay, $6.19. I think I'm gonna look that one up. And then we also have the Pro Shares Short Triple Q. So let's go over here to Amazon. Not Amazon, Robinhood. I'm getting all mixed up here. Let's just type in Pro Shares. Type in Pro Shares. So we have this one right here. Let's look at this one very quickly. Inverse leverage product. Okay, $6.44. And they're giving us a note here. And let's look at the performance of this. Ooh, see, that's why you got to do your research. I don't like this. Well, let me keep looking. Nope. Okay, not that one. Not that one. I don't like that one at all. I don't see nothing moving. Which one is this? Let me see. Make sure. I think we're still looking at the same one here. Let me try TQQQ. I think this is the $10 one. Nope, that's not the right one. Let me go back, family. Where's the one we just looked at for $10? Okay, PSQ. That's the ticker. PSQ. We're trying to find a really good low ETF that we can invest in. And that first one was horrible. They're saying that these right here are so volatile. This one's currently at $11. Okay. I'm not liking what I see, family. No. I would not invest in those. Not at all. Unless you're going to try to play the market and lose. Now let's go back up to this one that was $22. QYLD. That's the ticker. Let's look at this one very quickly. Hopefully they don't give us the same marking here. All right. Past 5 years. All right. Okay. That's not looking too bad. I mean, this is probably when the pandemic happened. Yes, it was. Dropped down to $18 the past year. A lot of volatility in this ETF. 3 months, 0.707%. Past month, 2.46%. The past week. Okay. Now, out of the 3 low ones I showed you, this is probably your best bet if you're not going to spend upwards of $50 to $70, okay? Because I can show you this one, which is SPYG. That one's a well-known one, okay? SPYG is a well-known ETF that a lot of you guys should know about, which is the Spider Portfolio S&P 500 Growth, okay? This one should have a lot better numbers. There we go. You see how there's a difference already, family? There's a difference already when we're looking at these ETFs. So again, you can also recurring invest as these as well. Okay, it doesn't matter if it's an individual stock or an ETF, you can still recurring invest at a very low price point. The past 3 months has been up 7%. The past month, 8.4%. The past week, 0.83%. But listen, there's some money to be made with this particular ETF, okay? And that's the way it looks right there. Now, it's one thing I do want you guys to understand when it comes to ETFs. You're not going to see ETFs blow up, okay? You're not going to see ETFs blow up like you do individual shares, okay? Because it's diversifying. It's a diversifying fund that is essentially investing in small fractions in each of these shares, in each of these stocks, which are located in the fund. But you can always say, and you can always make money off those investments Because it's diversified. So that means that it's not as risky as just investing in Tesla or just investing in Apple, where you are investing in all of them at the same time. So if Apple goes up $10 and Tesla goes down $5, you still make $5 when you invest in those ETFs. Hopefully that makes sense. And last but not least, I know I kept you here longer than I intended to, but here's what I'm doing with my portfolio. If you notice, here's some of the ones I have on recurring investment. Goldman Sachs, $25. Fidelity, $25. PowerShares Triple Q, that's that very, very expensive one I showed you that I'm making really good money off of. $25. Vanguard Healthcare ETF. And see, in this ETF, there's different healthcare companies in here, like United Healthcare and Blue Cross and Blue Shield and all these other particular healthcare. I can't think of no more, but $25 into that one. Vanguard Telecommunication Services, right? This one really looks into 5G. This ETF, I have a lot of companies in it like Verizon and T-Mobile and AT&T, all those companies that's dealing with 5G. Then we also have Vanguard Total Stock Market, where I'm investing in 4,200 shares with this particular one at only $25, okay? Apple recurring value. You see Apple. Oh, yeah, I'm investing in Apple. I'm a Google lover. I'm an Android lover, but I'm investing in Apple because that's where the money is. Now, also with Google as well, you should invest in Google. Amazon recurring buy, $25. Meta platform recurring buy, which is Facebook, $25. Plug Power, $25. 3D printing ETF. These are an accumulation of 3D printing stocks. Okay, we know 3D printing is not just the future, it's the present, where you go buy a 3D printing machine and that particular image you had in your mind, and you can design it and draw it up, and then you can actually print it out in a materialized product, meaning that you thought of a calculator or something, and then you drew it and you press go and the machine made it for you. That's what I'm talking about. Tesla recurring buy. Okay, so those are my recurring buys. I wanted to show you that because I'm not investing a lot of money in these stocks. It just takes time. You have to be disciplined. You have to be on a routine like you do everything else. You get up, you make your coffee, you cook your breakfast, you go to work, you make that money, you work hard, and then you blow it all. Don't blow it all. What's going to happen when you're 50? Are you going to get sick? Are you going to hurt yourself? What's going to happen when you're 60? Are you going to still be working? Or do you love your job that much? Whether you're an entrepreneur or not. What are you going to do at 70 years of age? Are you going to have money that you can bank on? Are you going to have shares and stocks and assets and 401ks that you can draw from? Are you going to be still paying on your house? See, these are the questions that you need to ask yourself. See, investing is not for now. No. Investing is for your future. Investing is for your kids' future. Investing is for your family future, because some of you have great relationship with other parts of your family that you may leave them something depending on the amount of accumulation that you guys invest. I know a buddy of mine, he has a goal, right? His first goal is to essentially make $1 million, right? And he's investing in 401ks, individual stocks, and so he's doing a lot of things to get to the goal. He's going to reach that goal. Okay, he's going to reach that goal as long as money keep moving. He's going to reach that goal. And I'm just trying to encourage you guys, because every day you're not going to be motivated. You're going to look at the market like, God damn, look how much money I lost, right? And you really didn't lose money. Your portfolio lost value. As long as you don't sell, you don't lose any money. Let me break it down. You have $500 in your portfolio. All your shares accumulate of this $500. The market is down. That $500 of your total portfolio sum now went down to $350. Like, damn, I lost $150. The only way you lose is when you start to sell your stocks. Okay? Let me make this more real for you, because I think sometimes graphical representation, you looking at it will give you a better sense. Okay? Let me show you this very quickly. Here's my portfolio in one day. I don't like that already, right? Because at one point, I was up to $38,000, right? $468. And let me show you in the past year. The past year here I was up to $51,000, right? This is when I made a very, very bad investment with Tesla that I lost 10 grand. And that's why I'm at 38. and it's been fluctuating from 40,000, so on and so forth. Okay. So in the past month, this is my portfolio. That's doing very well for me, right? Now, in the past month, it's only been around 15%. Again, I like to reach the goal of 20%, but nonetheless, I'm doing fairly well. Okay. And it got up to a point where I was at the $40,000 for the past month. But in the past month, ladies and gentlemen, I've been at 20% at $6,700. I didn't made more money in investing than some people make working their butts off. I literally is sitting here. I'm literally sitting here making more money than you showing up at your job. And guess what? I got a remote right here. I'm literally like, and you guys are working your ass off at your job. And I'm like, they out there working. And I'm just sitting here investing. That's what I'm doing. And I tell you guys, the reason why you see a lot of my option trading over here, that's how I make my daily money, my daily bread, right? Right now, they're not doing so well, but these are very, very long options, okay? And a lot of people, when they start understanding how options work, they want to get inside more options. And I totally get it because that's where the money is. I've done a few option videos, okay? Because usually to teach someone option, that would be a long video because it actually need to be in courses. And I'm thinking about coming up with a series of videos to really break down option trading because there's some good money to be made, okay? Because your regular portfolio, you really shouldn't be changing that around. No, you shouldn't look at it every day. It's going to build anxiety. If you're looking at your portfolio every day like I do, it's going to build anxiety. It doesn't build anxiety for me because I'm used to it. I'm not trying to be sexist here, ladies, but let me just say this. I look at the stock market, like a woman. Some days she's great and some days she's not. Like, yeah, I'm just having a bad day. Like my job, you know how it I'm not being sexist, ladies. I'm not being sexist, but you know how you be up one day, down one day, up one day. For the most part, the men that I know, I can't speak for all men, we're more consistent throughout the day. Like, when something is really, really bothering us. But for the most part, we have this very calm, cool. I'm just talking about the people I know. Anyway, I'm off that. But ladies and gentlemen, the point I'm making here is please don't stop investing. Keep it moving. Okay, why are you thinking about how bad life is, but you still have your job and you still have your health? People are making money. People are making great money. Okay, so this weekend I'll be going live with you guys, trying to figure out where I'm gonna be going live from, but I'll show you a special treat, right? Anytime I take a vacation, anytime that I travel, I'll always bring you guys along. And that's not the showboat because I'm not a showboater at all. This is a Gap shirt. This is about $10. I'm not a showboat at all because I enjoy vacations. And I just want to show you that when you invest, when you become a great steward of your finances, because before you start to really invest, I really want you guys to work on your debt. Work on your debt, ladies and gentlemen. Really work on your debt and don't try to accumulate more debt. Like, oh, I need another credit card. No, you don't. You got 5 of them. You don't need another one. And those 5 credit cards, you got about 25 to 50% of the limit used up already. Leave those things alone. Okay. So again, good morning, G. Good morning, Miss One. Nice to see you, Miss One. It's been a while. I'm glad you're back here. But nonetheless, for you guys who probably thought the channel went away, I did get hacked last month, but your boy is back. They try to hack me. I tell you. When you got some good information to your people, they always try to bother you, right? But nonetheless, this is Financial Literacy 101. Learn money and be inspired. And don't let Karen at your job mess with you. I'm out.